Hello and welcome to the February edition of our London Property Market Update. And today I'm joining you on a rather cloudy London day in the heart of Kensington, one of my favourite parts of London, so typical of London's heritage, with the lovely houses and buildings. Anyway, looking at what's happening in the market, despite prices staying flat in February 2026, has so far had a positive start, with Rightmove reporting a 2.8% increase in average asking prices last month, while growth in average earnings and lower mortgage rates has improved affordability, and higher supply levels means buyers have more choice, making it a good time to invest. Compared to January, the average asking price in February was rather subdued, with almost no change in value. Sellers are holding prices amid high competition to sell, with the number of homes for sale at an 11-year high. While average prices are almost the same as they were a year ago, average earnings have increased by 4.7%. far outpassing last year's growth of just 1.5%. And the number of sales agreed is also 5% less than in February 2025, when buyers were trying to beat the stamp duty deadline. However, sales are happening. We are seeing 9% more agreed compared to this time in 2024. According to the House Price Index, average asking prices in the capital were marginally up by 0.2% at just above £681,000. Among the London boroughs, Westminster and Ealing recorded the highest monthly growth of 3.9% and 2.9% respectively, while Southwark and Westminster produced the best annual performance, growing by 4.9% and 4.2% respectively. Turning to inflation and interest rates, the UK inflation rate fell to 3% in January from its very stubborn 3.4% a few months earlier. Although still above the Bank of England's target of 2%, analysts and experts are confident the Bank of England will cut interest rates to 3.5% in March, bringing more optimism to mortgage seekers. The average two-year fixed-rate mortgage is now 4.28%, down from 5% a year ago. This drop in interest rate is saving typical new buyers over £1,200 a year. However, we are seeing clients achieve rates as low as 3.75%. In fact, I renewed one of my loans in December and I got a rate of 3.8%. So if you do have a loan coming up, do get in touch. Turning to the rental market, ONS data shows that the average rent in London is now £2,253, increasing by just 1.1% in the 12 months to January 26. This slowdown in growth is largely due to an increase in supply, which is over 36% more than a year ago. Tighter regulatory and fiscal conditions have led many portfolio landlords to acquire rental properties through corporate structures. In fact, there was a record 66,587 new buy-to-let limited companies formed in 2025. That's up 8% from 2024 and a whopping 363% increase in a decade. While rental growth may have slowed due to higher supply, we are still incredibly busy, seeing high numbers of applicants, meaning voids remain low. As a landlord investor myself, I saw every single one of my rents increase by at least 5% in 2026. So I can say with absolute confidence that London property remains the most reliable way to generate rental income while building long-term capital growth. In my opinion, it's the best way to protect and grow wealth. At Benham & Reeves, our 21 London branches and 14 overseas offices are always here to help with anything you need. So thank you for joining me today. And as I always say, if you're looking to sell, buy, let, or even renew your current rental, please do get in touch so we can let you know what we can do for you. Remember, the Renters' Rights Act is now law, with the changes starting on the 1st of May. We're all prepared at Benham & Reeves, but if you need some guidance, if you have any questions, please do get in touch. I'll be doing a couple more webinars ahead of the changes, Plus, in my trip to Asia next month, I'll be holding a lot of talks and updates. So if you want to come along, do get in touch. See you next month.